spend much time. I want you to see this. I want you to see this. This is the part, this is the around March, right? Just this circle. We are going to focus on that circle and see on a lower time frame what was happening there. On a lower time frame, 15-minute chart, our entry chart. Okay. Our entry chart. I'm not sure what day was that. Okay. Okay. See what actually happened on that. This is the circle where I had circled on the 4-hour chart. You see that? So the market went up there and did what? It did a nice M there. It made a nice M there. Nice M setup, and what happens? You drop. It drops. And I told you, we spoke about this one also. This was the head and shoulders that had happened. Okay. And also a nice head and shoulders even within itself right here. But just that this shoulder was higher than the rest. It was higher than the rest. Alright. So always look at the higher time frames. It helps you with the direction of the market, to see where the market is actually heading, to see where the market is actually going. And that way you would know that, oh, okay, the M will happen on this particular part. The M will happen on this particular part for this particular reason. Okay. So I told you. So the second thing that you have to look at is what? Check if the market is trending. Check if the market is trending. Remember, you are not obligated to trade every chart. Someone can literally be making money on a single chart, just focusing on in January, February. Most of the setups I took came from GBP USD. Most of the setups I took came from GBP USD. I just saw the market, what it was doing, and I saw, oh, okay, this is what it is doing. We eat from it. You see? So you just take from what it is doing, I eat from it. Simple as that. You don't need to take a lot of things from the market. Look at this. Okay? This is a nice head, shoulders, right there. Respect. Respect. Okay? Inversely, backwards, look at that. The market drops. Okay, let's look at it on the 1 hour chart. So you look at on the 1 hour chart for you to see it simpler. Look how this M did on this. Okay, this is disturbing me now. Let me quickly remove that. Okay, look at this. So when you look at the 1 hour chart, it also gives you a better perspective of how the market is. Okay, the 1 hour chart will also give you a better, so you can also use the 1 hour chart to be analyzing, but also you take the trades on the 15-minute chart. Okay, so for an example, look at this. The market dropped here on this particular day, and it went up and it dropped down again on this particular day. And what happened? So and then it went up again and it dropped. What did it do? This is the second the second head, the second head of the shoulder, or the second, look at this, second head of the shoulder, or it can also be the second leg, because this was the low of the day, and then what happened after the low of the day was there? The market came down there, and then it gave us a second leg. Second leg, what happens after second leg? The market goes up. So I want to see it on the 2nd of March. quickly. Let's see it on the 15-minute chart. See that? Do you see what I was saying? Look at the market. It went down. First leg came up, went down again. Second leg, and then what does the market do? It goes up. About how many pips? About how many pips up? Probably you'd probably check out first. The first target might be here. Second target somewhere there because of this high there. Okay. So it's the way it is, guys. So always look for these things on the for you to have a bigger picture, a greater picture. Look at it on the larger time frame. Look at the things on a larger time frame, and you would see a better picture. For an example, look at this one. Look at this one. Look at this one right here. 8th of what? 8th of March. 8th of March. Market came down there. It created a low, went up there, and then it came down again. And this, what did it do? It spiked. There is a spike there, or a rejection, and then it went what? Up. 1 hour chart. Look at that. I want you to see on the 8th of, that was the 8th of March, or the 11th, I mean, yeah. So look at this. The market went down, boom, went up there. Second leg right there, spike. Market goes up. Okay, so look at these things on a what? On a larger time frame, whether the 1 hour time frame or the 4 hour time frame, whichever one that suits you best, and you would see that these things are happening everywhere. Okay, so I would really wish to finish this. Let me see, 30 minutes. Okay, 30 minutes. So this is what is happening in the market. Look here on the 4 hour chart here. Look what happened now on the 4 hour chart. After there was that nice W on the 8th, and then it came down also, because this separation here is the week. If you are trading the weekly highs and the weekly lows, if you are trading weekly highs and weekly lows, okay, this is what you could be doing. Weekly high, weekly low. Weekly high, weekly low. Okay, because this separation here, this means it's a week. Okay, like let's see, for an example, let's say 1 2 3 4, 1 day, 1 2 3 4, 2 days, 1 2 3 4, 3 days, 1 2 3 4, 4 days, 1 2 3 4, 5 days. Yeah, this is all in a week. Okay, so for an example, this week, from the 8th or 11th till the 15th, the market made its high. That was there, and it spiked and it went down. Immediately when we got this spike here, it was for sure that the market was going down. It was going down because it was trying to create a big M there. A big M. There's two things. It will either create a big M, look how skewed that M is, but it's an M, or else what you can see in this market is this. Look what you can see. Shoulder, head, and this one, shoulder. You see what this, because this is respecting this here. This is the reason. If you check the 1 hour time frame, or this is now the 4 hour time frame, you can see inversely also. Look at this. I want you to see this. This is a 4 hour time frame. Shoulder. The reason why this was rejected also. Shoulder, head, and on the head there was an M. So on the head there's pretty much usually always an M that happens on the head. Like let's say here you'd see that there's so many M's that happened here, and nice drop to the floor there. So let's see what is happening now. So look what I had predicted, that the market will do this and it will continue to go up there. So the structure which I would want you to be doing is what I did. I did something yesterday, last night before I fell asleep. Remember, if you know me very well, the time I sleep, I sleep. If you know me very well, I sleep around 2 a.m. 1 a.m. 2 a.m. 1 a.m. Those are my usual times of sleep. And when I wake up, I'm waking up at what? At 8 o'clock, at 7 o'clock. But I sleep at 2 a.m. So 2 a.m. Wow, look what it's giving out there. I told people that you should look for a buy there, so that means they should have been looking for a second leg. Look what is happening there. 20 pips already. Wow. 20 pips already. For those who listen to that setup, congratulations, wherever you are. You see this setup? I saw this setup yesterday. So I tell people that what you need to do. So remember, the first thing is look for what? A structure. Look for a structure. That means look for either look for a double top or double bottom, or a M or W, okay, on a larger time frame. Look for a possible M and W on a larger time frame, and then look for, or else to look for a head and shoulders, and make sure you draw a line, or you draw the possible setup. That means the before. And the second thing I want you to look at is the what? Check if the market is trending. Check if the market is trending. So if you want to check if the market is trending, you can start drawing a line. Yesterday I just looked at this. Okay, this I drew right now, so we can remove this. It's not, I just drew it right now. I'm sure people saw this when I was drawing this line. Okay, look at this. I want you to see this. So I drew this line here. Look at this first line. So look every place where this line went, there was an M. So the reason why you could be drawing a trend line is because you also want to see where the M's happen. Most times it happens on these lines. Look how it happened on that line there. So that's the first one. And then when you drew again, it respected this second one. So we would be expecting a third one to be happening. So which happened around this point here, which was the day before yesterday. On Friday, I think, yeah, on Friday, a nice M happened. Look, head and shoulders, the one which I was showing you. Now the thing that I want you to be doing is this one here. This is what I drew yesterday, last night, just last night, because I had drawn this trend line, I knew that okay, the market is going down, and I drew this line right here. This is actually this is a pattern or a wedge formation. A wedge formation where the market will go down here, it will hit there, it will hit again, it will go up there and hit again. So it gets smaller and smaller and smaller until it breaks out. Either it goes up there or it goes what? Down here. Alright. So yesterday I looked at this pair, I saw head and shoulders here. Okay, it had happened already. And yesterday there was a nice, you see, yesterday was one of the days where the market gave you so many M's and W's yesterday. So many M's and W's. So remember, the M's and W's, it will happen everywhere, every single time, and it will always respect these indicators that we put there. It will always, there is always a point where it has to respect what, these indicators. Now watch this. Look at this. It dropped down, right? I saw Head and Shoulders, all right. It dropped down and it completed the what, the shoulders, and because of this, then what happened? It went up there. It created a second what, a second leg. So this was a nice second leg as well. Okay, this was a nice second leg. It went up there, it came down significantly, and then created the second leg there. And once it created the second leg, look at this. Once it created the second leg, so sometimes, most times, the second leg will try to move away or play away from this, because these guys are trapped. Okay, it will try to play away from these guys because these guys are trapped now. Because if it goes beyond it, it means it will release these guys. But the guys who have sold here, there are people who sold here. So because of that, it has trapped them. Went up, came down, spiked here. Okay, again, people were trying to sell here, and then it rejected them. And once it rejected them, it went up. Now, the reason why I saw a sell, this you see this line here, because at this time I was still awake and the market had gone, I think, down here. Look how people would have just taken free pips here. Look, around 20 free pips people would have just taken this, because this was just an obvious thing. Look, 1, 2, 3. Oh boy, look. It went up there. You don't count this thing here, because this is just too small for it to be counted anyways. You see 1, 2, you see that, 3, and then it gives you second leg. On the second leg, usually it gives you a spike. On the second leg, it gives you a what, a spike, and then it drops. So when it dropped here, I knew that it would what, it would go up. Remember, this is what happens almost every single day. The market goes back up there, whether it passes the previous day's high or low. So the reason it passed here is because it wanted to take out people's stop losses here. Kill them, and then what does it do? It dropped. This line here, you see this line here, this was something I had drawn yesterday. Before this occurred, I woke, and the craziest part is that I fell asleep, and I was actually expecting it to happen around I was hoping it happens around 8 o'clock, because that's my usual time, 8 or 9. I was expecting it to happen around, you see where I put this arrow here, around quarter past what, that's where I expected the move to happen. But this line here, all this is what I had drawn. This is what's my before. So I didn't take a screenshot of that, however, but I drew this, I put up there, and then, so it was either the market was going to hit here and then drop, or it was going to go up there and hit this trend line which I had put, and drop. And the drop was going to be significant, and I knew that was going to be the case. That's why I was waiting for it, but I had missed it. I woke up late and it was gone. So you see that it's because the pattern is small. It's now getting smaller. So it hit there, and now it has to go up at a certain point there, and then we'll see whether it breaks out there or it breaks down here. Okay, if you look at your cheat sheet, on page 10, there are these wedges. Now wedges are very much important. It will show you whether there is a continuation or there is a reverse also that will happen. There is a rising wedge. A rising wedge now is one that, you see, if you draw your patterns, you see it going up. All the upper one is going up, and the lower line is also going up, And when that happens, that means there will be a what? A bearish candle going what? Going down. Okay? So there'll be a sell that will be what? Intact. And when we have, you can see this is the same thing as this one also. The market, let's say the market is coming from up there, is going down. So as it is coming from up there, it's going down, and you notice that when you draw, the market is busy doing this thing, the candles are getting smaller and smaller, and you draw your line and you can see it's getting smaller and smaller, and it's all rising. Once it's rising like that, you should know that the market will go what? It will go down. And what do? You take it. Once you take it, it's game over. It's game over. And then there's also times like this where the market is coming from up. Okay, this one was market coming from down, and it's also having a rising wedge. It will also what? It will also drop. Falling wedge,